Hello YouTube. So let's talk a little bit more about this market profile, right? So, a lot of people they're quite intimidated by it. Doesn't look like a normal bar chart. There's no candles. It's completely different, right? So, but there's huge advantages to this, right? So it might take you a couple weeks, couple months to learn this, right? But it's going to give you an edge, right? So okay, so let's look at this market, right? So we're looking left, right? In my last video, we looked at these 2 days, right? Okay. So then it comes down, right? The market drops off, right? And then it can kind of consolidates, right? So, okay, you see these value areas, right? These kind of dotted lines with the solid line on the right, right? So that's like the value area here that would be containing 70% of the trading of this particular day, right? So same thing here, 70%, 70%, 70%. So notice, right? So the market likes to spend a lot of time in this kind of area, right? So you see how the market reverses, right? Yes, it goes up, but there's a bit more that might meet the eye here, right? So, okay, so that's all well and good. Market it likes to hang out here, and then it gets tighter, tighter, and tighter, right? But look, the value areas are overlapping, right? So this is the biggest value area. We have our trending day with our double distribution, right? And then look, the next day, there was some opportunity here, right? And the same thing here. Now look, if you were interested in Wyckoff, you could say, okay, what is that? Why is that tail there? But look, that's a selling tail. People sold up there, right? So, but if you're studying Wyckoff, well, that's your sign of strength, really, right? Because the market tried to go up, right? Because here we got our selling. This is climactic selling action, right? And then look, the first thing it does, it rallies, right? We have a little bit of selling tail here, right? And what I mean by selling tail is that basically the market, it comes up, but you see these little C's, there's 1, 2, 3, 4. And then after the C's are printed, look, because they print, right? A, B, C, D, right? So C prints for half hour, and then D, and then E, and then F, and look at G, H, L. Look how low it gets, right? And that's what? Like, get our cursor here. So that's 84. So it kind of comes down to like, even if you took it at L, there, so that's like basically just under 50 pips, like if you had that move, right? But understanding that, that is kind of a Wyckoff thing. But what's really happening is that when the trend changes, you're going to see selling tails in both directions, right? It's just going to happen, right? Because if you're thinking, okay, if you're a big bank, are you interested in buying this right here? No, right? Because you want retail to take different positions, right? And you can see the orders, right? And then see how the market dips into the pool of money, right? But it also dips into this pool of money, right? So it fakes everybody out on both sides, and then it does its actual move, right? But we don't need to be concerned about any kind of indicator. When I mean indicator, I mean like a mathematical calculation done on price itself, right? Because we know that, okay, liquidity, what happens first? So liquidity occurs first, right? So institutions love liquidity because they can get their better price at when they see liquidity, right? Okay, so then after we see liquidity, then we typically see volume, right? Right, so volume, I mean, where is the market happy to trade at fair value, right? So the broker's job is to facilitate trade. So that's what it's doing, right? So now we had liquidity to the left. Now we have volume, and now we have price, right? So liquidity, right? Volume, price. So price is just your advertiser, right? That's all it is, right? A lot of people, they love price action, right? But that's not necessarily what's gonna give you insane results, right? Because if you come to the conclusion that price is not as important, like what I'm saying is time is important, right? And you can read like even Jesse Livermore, like that's one of the things he said, is time is the most important thing in trading, right? So, okay. So what happened here? So why did this market come down, hang out for like a good 3 days, and then rise up? But look, okay, the market spent a lot of time in this area, right? And these concepts are hard to understand, I admit, right? It took me like over a month to understand this one particular concept, right? So, okay, so now the market has essentially accepted this price at this day, right? So then we go into the next day. Okay, see how big and fat these point of controls are, right? See this value area is generally in the same value area as the previous day. Not only that, it's overlapping, like exactly, right? So now we have what they call a high volume node, which is a volume profile concept. That's really basic, right? But look, see how when the market opened the next day, it opened just on the edge of the value area of the previous day, with the initial balance was very small. We got 1, 2, 3, 4, 5, so 10 pips. So how hard do you think it is for the longer term traders to take the market in whichever way they're going to go, right? It's not hard, right? Versus another day like this, right? So if the bigger the initial balance, the harder it is. Like we can come back to our other example from a previous video. Looked at this day, right? Okay, there's not much opportunity there, even though it looks like a P shape, right? Look how big the initial balance is, right? We come the next day, okay, much smaller, but look, we see signs. Even though this one's symmetrical, we do see signs to the downside, right? And look, boom, bang. Okay, trending day, double distribution. We know that's weak, right? But that's another concept. So, okay. So the market has essentially accepted price in this area. There's a lot of people that have taken positions, including banks, institutions, right? And retail, right? Okay. So then now, look, because the market has accepted price, what do you think is going to happen, right? It's going to want to try to move away at some point. And when it moves away, there's going to be other time frame traders that get interested, right? So if you're a scalper and you're scalping all day in this market, you're providing liquidity for some other long-term time frame trader, right? So you could be buying, you could be selling, while the institutions are buying from you, right? But you don't see it, okay? Because you need liquidity, volume, then you get a price move, right? Okay, so then here, this is like classic example of a breakout, right? So the market A, B, C, D, E, F, G, look how tight that is. H, I, and then all of a sudden, I, J, K, L, M, N, O, P, all the way up, Q, R, S. Look, selling tail, that's kind of a strange one because it's kind of almost cut off there. But you see how hard the market broke there, right? And that's all because of the market was happy to trade in this particular area for what? I wouldn't really count that day as much of a balanced area. But look, 1, 2, 3 days in the past, okay? It's relatively balanced. There's not much opportunity in these 3 days, right? But as soon as the market broke out, okay, now notice the market broke out on increasing volume, right? So if you're a salesman and you're like, okay, I'm selling cars, I'm selling Lamborghini, right? Okay, so I'm selling a Lamborghini for $100,000, okay? Nobody buys it, right? So then you drop your price down, just like an auction, right? $80,000, $60,000, and okay, now people are starting to buy, right? So as time goes on, right, you're going to see different prices. But now look, on your 3rd or 4th day of the auction, now there's interest. You're selling it for $120,000. It breaks out of this range. And look how these numbers are printed, right? So when I see this point of control, 1, 2, 3, 4, 5, 6, 7, 8, 9 prints. Okay. Now look. Point of control. When the day closes, look, it closed here, but look at the point of control. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. That is 18 prints, right? That's obviously more than that one. So guess where price headed in the future? Up. You get it? Right? Point of control, right? So essentially, we have been looking at a trading range for about 3 days. The market broke out on increasing volume, and we know that because the value area, look at that gap between the value areas. That's a fresh trend, right? A decision was made from this high volume node, and look how low the volume is here, right? Because that represents a decision being made. So the longs that were the scalpers or the lower time frame traders or order flow or whichever, however you trade. If you're short-term time frame trader and you were trading this market, you're out here, right? So guess what? So when the market comes to this level, some big bank is buying up your order as you're selling, so it doesn't really come down to retest, if you know what I mean, right? So it makes sense. Okay, now the market rallies. Yes, it does kind of retest here and it does kind of retest here, but that's like days after, right? So who's to say that this is or is not a fresh trend? I know that because look at the gap value area. So look at, it's all about fair value price and value area.